No.
All right. Happy Monday, Charlie. How are you?
I'm excellent, Kelly. How you doing?
I am good. I am good. Thank you, everyone, for joining us today. And we're talking about a topic that I love to chat about. And it's a little bit of an unknown gem sometimes in mortgages, and that is renovation lending. And I'm joined by Charlie Napolitano from Total Mortgage. And Charlie, if you could kind of tell everybody a little bit about who you are and what you do at Total.
Sure, absolutely. So I'm the renovation guy. I'm in my 25-year long mortgage career. The last 12 or 13 years, I've specialized in renovation mortgages, right? So the ability to purchase and include upgrades and improvements and repairs right in your mortgage. Like you said, it's a really hidden, gem that people need to know about. I've been talking about it for many years, and at Total, I oversee the renovation mortgage department. So all aspects of it, start to finish, and we partner with our sales team and help these things get done smoothly.
Absolutely. And it's funny, whenever we call them renovation loans because we were trained by you, but a lot of realtors and other lenders call them 203Ks. But I always like to dispel that myth that it's not just a 203K. What are sort of the
Right.
renovation loan options?
Yeah, it's a really good point, Kelly. In fact, just a few years ago, it was confused every time about with a 401k. And they thought that I said, no, these days, most people do know the 203k. Like you said, it's the flagship renovation mortgage, FHA's product. It works great, has so many great features, but not every buyer or borrower is an FHA borrower. So having the ability to do a conventional mortgage with Fannie Mae or Freddie Mac and do the exact type of mortgage, a renovation mortgage, right alongside the normal agency guidelines, it's gives everybody an option.
Awesome. I love it. And for those of you who are watching who might be a realtor, it's funny because when we say renovation loans, I think there's a lot of assumptions for people about like, what does that look like? What am I renovating? And some clients go into a home purchase knowing that they're going to do a renovation loan from the get-go, right? They're only searching for houses that are maybe a fixer-upper or they think they're going to get a deal, a little bit of work to be done. But the reality of renovation loans is that's only sort of part of the story, right? The other part of the story is the houses that maybe had a failed inspection, maybe had a poor appraisal, maybe a large issue was found sort of during the due diligence process, and now we're turning this into a renovation loan.
Mm-hmm.
What's your sort of thoughts on what you're finding with borrowers? Are most people going into renovation loans knowing that's what they're going to get, or is it kind of the surprise ending for some people?
That's a great question. It really is a true combination of both. It really is, because in this current market, a lot of buyers are recognizing that this is a problem solver, as a home buyer, meaning we're actually finding a way to expand the inventory because we're helping people see that they can look at these other houses. Kelly, the house we know it has a bad roof, the house that we know there's a problem with the septic. Why is it still on the market? It's been on the market for what, 3 hours now? It's still on the market. So it becomes a problem solver for both the person that's thinking, you know what, I might, I might shop this way. But like you're also saying, the problem solver of a bad appraisal or a problem with an inspection, anything that could keep a house from being financed normally, renovation mortgage can jump in and we can close the house in an as is condition, no matter what an issue might be. We close it as is, and the work that they roll into their mortgage happens after the closing. So we try to close on time, and everybody's happy at the end.
I love it. So if I asked a lot of realtors their thoughts on renovation lending, I would tell you this is the three things they would tell me. They take forever. It's a ton of paperwork, and it's going to cost the borrower way more in the end. What are your thoughts on these three myths?
All right, those are good. Those are good myths
I've
right
done a
there.
lot of these, Charlie. I know.
I know you have. I know you have. You've seen all the different things that could happen, right? I would say first things first. In today's real estate market, mortgage market, there are actually people that treat this as a true specialty, like us, like Total Mortgage. We're the number one purchase lender in the state for the last 4 years, and we're going to be the number one renovation mortgage lender in the Northeast, in short order, we hope. Um, The reason they don't take much longer or even any longer is that we have a department devoted to it. So we work alongside our sales team as the rest of the mortgage is getting taken care of as normal. We're handling the extra paperwork, that's involved with a renovation mortgage. And it's not really as much of a difference than people think it is. It's really a packet of paperwork that a contractor has to complete, obviously.
I do.
And if a mortgage lender knows how to handle that packet of paperwork properly and the contractor's estimate and how it affects the appraisal, it goes off as a normal mortgage like any other. So they can take a little bit longer, let's be honest. There are sometimes very, very large projects that are involved in a renovation and could take longer for a contractor to get all of his things together. But it's part of the process, and we make sure everybody has the same expectations.
Absolutely. Now, what's your thoughts on interest rate? Because that's one of the pieces that come up a lot of people like, well, it's so much more expensive than a normal mortgage.
Yeah. So I always have the same, Charlie cliches that I talk about over and over. And they are, these are just normal mortgages. They're mortgages that are the same as any other FHA mortgage, same as any other Fannie Mae or Freddie Mac mortgage. It's just that it includes this extra piece, which is the contractor and his estimate. Because there's, products right from the agencies, we get our pricing right from the agencies, which means renovation mortgages are really comparable. Typically across the industry, we like to say it's usually a quarter to a half a point in total interest rate difference between someone buying a house with or without a renovation mortgage. What's interesting is there are even cases where we do renovation mortgages where the rate is exactly the same as the regular mortgage.
So
How's that
that
for a
can
little
be
teaser?
that can be a big win for somebody. Now, when we say renovation mortgages, I would love to get a little clarity for the people watching. What are we renovating, right? Is it just major issues like, okay, you need that new roof, you need that new septic? Or what if you find a house, maybe it was built in the 80s, it's a little dated, you hate the kitchen, you hate the bathroom, the floors need to be redone. Can you use a renovation for that? Or is it really only for things that are problematic?
Yeah. So another Charlie cliche, from appliances to a tear down. Honestly, a renovation mortgage could be used for anything from repairs, improvements, upgrades, a combination of all three. The thing that is most surprising to real estate agents when I do my classes and my lunches and all that stuff, the most surprising thing they always tell me is that they didn't realize that you could do a renovation mortgage and only do improvements. That I thought it had to be broken, and it doesn't have to have any repairs actually included. I always say it could be that perfect house on the perfect street that doesn't have a big, beautiful deck on the back of it. Or this house would be great if only it had a new roof because it's going to need one in a few years. And I don't know where we're going to come up with that. Doesn't need it today, but we can buy a house and make those improvements, the roof, the furnace, again, or the patio or the finished basement. You can even
Little,
build a garage.
wow, a little bit. Can you put a pool in?
That you can actually specifically with the conventional renovation mortgages.
All right. So
FHA doesn't let us do the wackier, what they call luxury items. So, if you want to put a pickleball court in your backyard, you're going to have to do a Fannie Mae home style renovation mortgage to do it.
but they'll let you. Well, and I think that is one of the big myths with people is I had a client a couple years ago who you helped me with, who he was buying a relative's house. It was a brand new house to him. House had not been updated in 30 plus years. And they put a whole second floor on the house as part of their renovation. So it
Yeah.
was a little 1-story ranch. It was on a great piece of land in a great town. They needed more room. And so he had a $200,000 renovation loan, and they raised the roof, put a second floor on, redid the kitchen, put a deck on. And it was life-changing for them because this was a house they
Yeah.
couldn't find otherwise. They got a good deal
Yeah.
on it because it was
Yeah.
family.
Yeah.
So it was something that was huge. And I think a lot of people don't realize that you can go that far with these. It's not just, the windows need to be redone. It's not just those.
Right.
Now, those can be big wins though, right? The stuff that has to be done. So especially for an FHA loan, if you have appraisal that's problematic, right, which we sometimes have, and you're looking at things going, you know, I don't know that this peeling paint's gonna fly. I don't know this deck is gonna fly. You can
Mhm.
use the renovation loan to kind of get over these appraisal issues, correct?
Absolutely. Yeah. In fact, in I keep saying in this market, we all know it's a challenging real estate market, obviously. Um, the fact that we're using these type of mortgages as a tool, like I said, for our home buyers to find more options, for our home sellers to be able to say, you know what, I don't have to make all these repairs. I don't have to worry about it. Even though, they're going to sell the house anyway, Kelly, we know it, right? But if they know that they can sell even with deficiencies and whatnot, it's an advantage for a seller as well. Um, it's to be able to have a home inspector. I was trying to think of the word, to have a home inspector be utilized in a buying process who happens to be a renovation consultant as well, gives us an advantage on those type of items as well. We're getting the eyes of FHA, so to speak, out of a home inspector who's certified that way long before our appraisal is even done. So we can identify possible issues that might come up, and we can determine early on whether or not it needs to be a renovation mortgage.
Absolutely. Now, are these only for purchase loans, or can you refinance into a renovation loan?
You can also refinance. Most people do not know that, as you know. Um, what's great about a renovation refinance is that it's a rate and term refinance, as we call in our business, rather than a cash out transaction. Um, it's also amazing about it is that the value of the home that we use when we structure our refinance is based on their home with those improvements already done. So someone who does want to make a life-changing renovation at their house, they want to redo their whole lower level, or they want to put some, whatever it is, build an in-law suite or build a garage or an ADU, right? The assisted dwelling unit. What does it stand for, Kelly? ADU?
Um, I'm blanking on it now too. It is dwelling
Assisted,
unit, but
assisted dwelling.
no, I don't know.
Accessory.
Accessory, there you go. Accessory
Accessory.
dwelling unit.
Thank you. I was thinking assisted because a lot of people use those as their in-law
Yeah.
apartment. So
They
back
can
to what you.
they can use it for that. Well,
Sorry.
and another use for it that people don't realize too is kind of along that lines. I had a client a few years ago who her spouse had became disabled
Mm,
from an illness, and they needed to make their house handicapped accessible. We had to put
mm,
ramps in, new bathroom, new kitchen. We needed new wider doorways, and it was an expensive renovation. It was about $50,000, and they were kind of having the debate of, can we keep him in the house, or is he going to have to move to some sort of assisted living care? And we were able to keep him in the house by doing this renovation loan. He went to
yeah.
an assisted living facility for about 3 months while the renovation was complete, and he came back to a
Mm,
house that was completely handicapped accessible. And
yeah.
what a great way to use this loan product, right?
Yeah.
Keep
Yeah.
people in
It,
their
it
home.
really is. It's an amazing way. And again, in our business, the difference between this type of refinance and a cash out refinance. Sure, if you have tons and tons of equity, and even beyond the work that needs to be done, something like that would be a large renovation. Um, you could do any kind of mortgage to do that, but most people do not have that kind of equity. And what's
Yeah.
beautiful about a renovation refinance is that it's not only based on the after improved value, but it's also, again, treated as a simple refinance, which means we could use up to 97.75% of their home's after improved
After.
value. So anyone almost that's right, that's not underwater in their mortgage, anyone with even a little bit of equity could usually refinance their home to improve it,
Absolutely.
or expand it. And in today's day and age, we all know people who are staying in their homes, and they've decided to make it their forever house, make it bigger, right? Make it better.
And this is the best way to do it. Now, what if we could give realtors who might be listening some advice about, if you have a client who is talking about a renovation loan, or you guys go view a house that we sometimes see that right in the listing, right? Renovation loan required. Do you have any tips for them, things to keep an eye out for? Should we be getting a contractor in the house prior to making offers? When do we sort of engage that HUD consultant? Like, what are your thoughts for a realtor about just some quick things that they can kind of put in
Yeah.
their tool belt when they're working with their clients?
Yeah, that's a good question too. First and foremost, which comes up a lot in these discussions, is when we're pre-approving a home buyer. When our agent is working with someone who is looks like they're going to be a renovation home buyer. We always remind them that we're pre-approving that buyer based on the full total acquisition, based on what they're going to buy and renovate. So if we pre-approve someone for $400,000, we're thinking, great, they could buy a house for $400,000 and turn the key and move in, or they could buy a house for 375 and have a 25,000 budget, or for 350 and have a $50,000 budget. Because we're always pre-approving people based on their wants and their needs, of course. So that's thought number one, is know our range and work backwards, so to speak, in terms of shopping. Your question about contractor involvement and consultant involvement is a good one, because it works different ways all across the board, right? Yourself, you've done transactions probably in every different way, where the contractor's in the back seat with the agent and the buyer. Wouldn't that be nice? And we're looking at the house and we get an easy idea. We also have houses that go under contract before they've met a contractor, because they've been pre-approved for a certain number, their mortgage contingency on their offers based on this number, right? And during the inspection contingency, they're having a home inspection done, hopefully by our recommendation with a HUD consultant or an inspection consultant, who can, like we said, not only give them an idea of required items, but also give them an early idea of the cost of items, because these inspection consultants are part of their main job is to know the cost of items and know that a contractor is making a feasible estimate so the work can be done properly. So really in any order, Kelly, but I always say the involvement of a consultant or an inspection consultant earliest in the process is best.
It's best. Now can you tell everybody a little bit about who are these consultants?
Yeah.
Are they your home inspector? Because most realtors have a home inspector that they like to use. And sometimes
Right.
there's some frustration when we're like, hold please, we don't want you to
Mhm.
necessarily use your normal home inspector. It would be beneficial to use these kind of consultant home inspectors that kind of know both parts. So want to explain a little bit about who are these people? How do you
Yeah.
find them? And what do they do in the process?
Mhm. So they are typically, they're home inspectors. They can be former contractors with many years of experience. There's different HUD, the Housing Urban Development, FHA, has their guidelines to make these individuals HUD consultants. They act as a liaison for a lender and a borrower and a contractor. They're kind of the quarterback involved in the middle of the renovation transaction. And they're there primarily to protect the interest of both the home buyer and, of course, the lender, and make sure that the contractor, like we were saying, has the funds feasible, worked in, that we're going to have enough money to complete the renovations. The consultant is part of that transaction for that reason. So they're either going to be home inspectors, which most of them are. They're found on a list on the HUD.gov website. There's a national list. Lenders like ourselves, who have a department devoted to it, have relationships throughout the country, in all the different markets that we do business, because obviously we do work with them, and they're also great connections to the contractors. So really, probably the biggest frustration, I think, for real estate agents when they want to jump into this type of business is not everyone has a contractor. Not everyone can get someone out in a week to go and make an estimate. That's also where we come in as a specialty lender. We pride ourselves on having those relationships, and that we can assist and get this business done better, right?
Get it along and get it moving.
Yeah.
Now sort of with that contractor piece and these consultants, if a consultant says you have to, add handrails, fix the paint, and whatever, there's 5 things that you're required to do. What if you also want to like renovate your bathroom? Are you allowed to do that? Or are you really only looking at the things the consultant says these are required to be done to get the loan?
Yeah, you're able to do combination. So even if there are requirements, if there are items that are deficiencies that have to be included for the lender, for us, but you also wanted to do your bathroom, or you also wanted to redo all the floors on the first floor, you can add things in as they go. It's really a matter of the required items and the wish list items, so you can do both. One point though, you made me think of. Always, as with any real estate transaction, any mortgage, it's it's always up to the appraiser at the end of the day what is required and not required in terms of the lendability of a property. So even if a home inspector has an opinion of a certain item, it really comes down to the appraiser. The HUD consultants, though, however, are definitely a deeper level, of training, and they're there for that reason, to be able to identify those items.
Yeah, what they think is gonna come up and what might be an issue.
Exactly.
Now,
Exactly.
can a borrower do their own work? So we get that question a lot.
Mhm.
Because a lot of people think, oh, I'm handy, so a 203K renovation loan would be a great fit for me. And that's
Right.
sometimes a struggle because sometimes when you're handy, it's not a great fit, because you can't necessarily be doing it on your own. So if you could explain to people a little bit about, identity of interest, can you do your own work? Who can do this work for you?
Mhm.
Because I always get, clients that are like, oh, well, I'll do the demo work. I'm an electrician and I'll do my own electrical work. And we have to be
Mhm.
like, pump the brakes.
Right. So the easy answer is never. That's the easy answer. The real answer is, um, there are some deep guidelines within, because I am doing the renovation thing a long time, so I can tell you that if you read deep enough into Fannie Mae's guidelines and even FHA guidelines, they have some exceptions where sometimes a homeowner can do some of their own work. I can tell you that I've yet to meet a lender that is okay with that. If we have one overlay at total mortgage, and maybe only one, would be that we do not let any homeowners, home buyers, or borrowers do any of their own work. Always have to have a contractor. Um, the difference between the government loan, FHA, versus the conventional loan is there's no identity of interest. So when it comes to the contractor, an FHA loan, or any renovation loan, let me start by saying, requires that a contractor is licensed and insured
Mhm.
and has some references. Every lender handles those differently. My department, we have someone who literally picks up the phone and calls each reference. Even though it's really the borrower's due diligence that they need to also check references, but we do as well. Um, since we're lending the money for the work before it's being done, um, that's why we, as many others, are strict about no borrower doing their own work, a licensed and insured contractor. So the identity of interest thing, I know I started to go off on a tangent. Um, an FHA loan does not allow for a borrower to be related
Mhm.
by family to the contractor. So mom or dad or son, brother,
Can't do.
FHA would have a problem with that. However, the conventional renovation loans, Fannie Mae and Freddie Mac's versions, really don't have a problem. They don't care. There's no identity of interest, and as long as the contractor is licensed and insured, they don't care if they're related.
So that can be a
Yeah,
big boon for a client, right? Because we do get that, right? My dad does
yeah,
this, my dad does that.
you
We have
bet,
a product that'll solve that for them.
you bet. I've had scenarios where the customer said, "Well, if my father's not the contractor, I'm not doing this. Why would I not want my father to be my contractor?" And I can understand that, if so. Yeah, so we have a solution to that, right?
Awesome. Now, one of the things that comes up sometimes for us is the Title V in Massachusetts, and this
Mhm.
is a renovation loan is a great solution to that. Can you explain a little bit about what that is and how a renovation loan can solve kind of the problems that come into play there?
Yeah. Yeah, so Title V, septic, right? And septic really continues to, as houses get older and older and older, as we know, continue to become problems. Um, Renovation mortgage can be a great solution, of course, because it's not just I'm pointing at my house, not inside the house necessarily, but around the house as well, like a septic, or well, things like that. Title V. in Massachusetts. So they need to have Title V septic inspection made prior and determine if the system is acceptable or not. And that has to happen during the process. Now, it's usually a seller's requirement, and the seller can take care of. But the greatest advantage, of course, being that we can close on the home in the condition that it's in on closing day. Our survey and our septic estimate will become part of our transaction, and the appraiser, who obviously is integral in the process, is going to know that this work is being completed to satisfaction, and the house is going to be 100% at the end. So the borrower is financing in the cost of the inspections as well as the septic work itself right into their mortgage.
Awesome. Now, a
Yeah.
fun kind of little piece to renovation loans that people may not realize, especially in this market right now with appraisal issues, is if I have a house under appraise, okay, so
Mm,
say, I'm just making an offer on a regular house. I'm not doing a renovation loan, or that wasn't my plan, but I now have maybe a $20,000 under appraisal. How
hmm
can a renovation loan help me with that?
Yeah, that's the hot topic, Kelly. That's something that gets talked about in every single presentation these days, because it's happening. It's thank goodness it's not a common everyday occurrence, but houses do underappraise, as we know. Some houses are overbid. Really? you know,
Not in this market,
um,
never.
yeah. So the answer is, so the little known fact of a 203K, an FHA 203K specifically, this doesn't apply to the conventional renovation mortgage. The conventional renovation mortgage value is based on the total acquisition, the purchase plus the renovation rolled together. On a 203K, it's actually based on 110% of that after completed acquisition. So say we had a house under appraised by 20,000. I'll use some easy math. So say we had a purchase of 420 and the house appraised for 400, right? Normally we have two options. The seller is going to drop the price 20 grand, which I don't see happening,
Nope.
or the buyer is going to come up with 20,000 in cash because we can't finance that shortage, as we all know. So here's a solution. And I say this is something that we have done on a monthly basis, honestly, for the last couple of years. Um, that purchase could be turned into a 203K transaction. You remember in the beginning, I said from appliances to a tear down. Someone can say, okay, I'm going to make this a 203K purchase. I'm still going to use the low down payment, 3.5% in this case, but I'm going to include some appliances in my purchase. So instead of 420, they're going to say 425, let's say, for their acquisition. And their 3.5% would be based on that. They're still going to buy the house at 420 with 3.5% down. But the big thing that saves this transaction is that low appraisal of 400,000, right? Even though these new appliances aren't necessarily bringing value to our appraisal, my 203K guidelines and underwriters now see that 400 as 440. It's
Mm.
110% of the $400,000 appraisal by the nature of it becoming a 203K. Even though we're not including an update or an improvement, which we certainly could, and we would gain value with it. But even a situation like this one, I'm saying, without value, appliances, would make our value jump from 400 to 440. Our transaction would still be based on the 420 purchase price. Seller gets 420, buyer pays 420, the house that they wanted. But suddenly we're able to still lend on it. So it's truly a tool, and it's a solution for right now.
Yeah, and that's a game changer. And how many of your clients too, guys who are watching, like once you kind of open this Pandora's box to, well, now you're a renovation loan, it's not just the appliances that they're getting, right? They're like, well, we'll redo the floors. I'll put a closet system in. At this point, you kind of might as well. So it can be a great way to end up with a really, honestly, very happy client who is getting into a house that, maybe didn't have great comps for it, and then kind of getting all their wish list items in one shop. So it can be a great
Got
week.
it.
Awesome. Well, Charlie, thank you so much for joining us. For those of you watching, or watching this on replay, Charlie's going to be joining us in June for a 1 hour masterclass, which is his big realtor presentation. It's a PowerPoint. It's spectacular if you have not seen it.
Right.
And it will go over soup to nuts, all of the things you need to know about this loan. This was kind of just us getting our toes wet a little bit if you weren't familiar with renovation loans. I will also put some contact information when we post this video in the Facebook group, that if you're trying to get in touch with us, trying to get in touch with Charlie, you have questions, we would love to answer them. But Charlie, I can't thank you enough for spending some time with us on this Monday morning. Does anybody have any questions? I don't see anything in the chat. If you've got any, let us know. We're at 10:30, right? I think we're about done,
Right.
but
It was a pleasure. Thanks for having me. Those were great questions. They really covered the bases, Kelly. I'm glad we got to talk about it.
awesome. I'm so glad. Well, thank you. And thank you all for watching.
So long.